Welcome to another video. My name is Nick and I'm a top podder on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So as usual, first I will be covering the technicals. We will then go and see what we have from an institutional perspective by checking the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this commodity. Now, starting from the monthly time frame, what we have is a very strong impulse to the upside followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a perfect 0.618, which is the golden ratio Fibonacci retracement, lining up with this previous resistance turn support, creating an incredibly strong support area, which in fact the market tested twice and immediately rejected to the upside. At the moment, we're testing the 50% and obviously rejecting it to the upside. So basically what is happening is that we're testing the Fibonacci levels one by one. And usually when you see this, basically the market creating higher lows in testing the Fibonacci levels, at some point you expect a break above the 0.32 and the continuation to the upside. So from a long-term perspective, by looking at the monthly, everything seems quite bullish. Dropping down on the weekly, what do we have? Now here on the weekly time frame, we can see how in this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here. Now, in general, if you have a candle like this, it means that when the market tested this area, you got a rejection, meaning that there is interest in this level. And in fact, after breaking it to the upside, when the market went and retested the area, it got rejected to the upside here. And at the moment, we are once again testing the zone and already started to reject it to the upside. So more continuation to the upside seems quite likely from this level. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily, what do we see? Now here on the daily time frame, we can see how we did have the creation of this M pattern. Now, as we said many times, after the creation of an M pattern, what we expect the market to create a move to the upside, to go and complete the pattern at the previous support turn resistance. And in fact, that is exactly what the market just did here. However, not only the market completed the M pattern, but at the moment we are also breaking above the neckline, which is also the resistance. And if we will have a successful break and close above this level, this previous resistance will be turned support. And in situations like this, what the market usually creates is an inverted head and shoulders. By completing the impulse, going and retesting this previous resistance or support, and then printing the continuation, basically creating an inverted head and shoulders. Now, if we go and see what we have from a commitment of traders perspective, which is the COT data, we can see by looking at the data on gold that at the moment we are still sitting with quite high net positioning, 211k net positions, with 296k longs compared to only 85k shorts. We can see how in the long term, shorts are actually getting decreased. We went from 125 to 85k shorts. Now, obviously, longs got decreased as well from 360 to 296. And we have seen that reflected in the price action with the market providing this correction. However, we are seeing now way more shorts getting closed than longs. And if we will get the creation of this inverted head and shoulders, we could see some institutional buying around this area, which at that point would start showing also adding of longs and not only closing of shorts. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will actually provide this inverted head and shoulders, inside of here, what we will be doing with students is as usual being reactive and not predictive, monthly, weekly, and daily combined with the COT data. Those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So after the break on the retest, inside of here we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market, at that point we would be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we would be looking for a potential long with a good risk to reward and good probabilities at that point for a move to the upside. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.